Oh my God! Randy Orton! Whoa, the casket! Oh man!
And what's going on, crypto critics? This is Sean coming back at you, another cryptocurrency video. A little fun with that meme there. Will Bitcoin rise? Will Bitcoin continue to go up to the upside to see new all-time highs? Taking a look at the Bitcoin price chart, what do we see? What do we anticipate? Look here, at the current time it's recording, Bitcoin's coming in at 61.2K. And looking at the charts, we are above the Ichimoku clouds. And this pullback here, we've seen this on the monthly. We almost came down and kissed this top cloud right here almost perfectly. Didn't quite get down to 44,000, but stopped around a little bit lower than 49, 48.7 to be exact. So is this pullback done? Could we see lower prices? Time will definitely tell, but this could be some type of flag pattern. We've showed you the technical targets. Looking at this stochastic, right now we are in a downtrend. Remember, when this blue line crosses below the orange line, this is to pay attention to. We're coming up to that 50 range, so will we come back and retest previous levels here before turning around, or will this totally reset us? We got to pay attention to. Pairing this with the RSI is showing overbought, oversold, overbought, but we didn't get too oversold just quite yet, showing that bright green color. We didn't quite see that, so could this just be stair-stepping its way up? One more pullback before we see a new all-time high and we start to melt faces? You be the judge. An update from Zeus Crypto. The patterns are clear parallels to 2016. Let's look at the charts. Look here. We bottom out on this one level and then have this run up to number 2, and then we have an A and a B bounce putting in lower lows. Then we have this sideways consolidation before we see this rip up to the upside and ultimately blast off. Look here, the 1 level, then the run up to the 2, the A, B bounce. Now we're going to see that sideways consolidation for some time before we have that rip to the upside, and then finally new all-time highs. This could be going into 2025, so buckle your seatbelts. And then why are people getting angry when they don't get a 2% salary increase at their job, but they don't care when the money supply increases 40% in 2 years? This is definitely love and retweet this, because this is 100% accurate. Why do you care about your salary increase? And 2% salary typically refers to the 2% of the highest earners in the given population or the region. So 2% is the highest earner. So why are you bickering back and forth in the office when you can buy Bitcoin and stop the debasement of the dollars you're actually working for? Look, and Bitcoin is being bought globally. Look at the Hong Kong Bitcoin ETFs. We bought almost 4,400 across the board, over 300 billion. So this is within a 6-month window. What will the next 6 months bring? Remember, this is a global adoption thing, not just in the US, the Eastern world as well. MicroStrategy is one example that's been killing it, and we see them here. MicroStrategy is one of a very few private corps that have been going all in on Bitcoin. The next closest one is Tesla. It's not even close. These buckets are all ETFs, all these green ones. So MicroStrategy is the lone corporation that owns 226,000 Bitcoin, and they're raising another $2 billion to buy more. When will we see the FOMO for institutions, corporations actually, buying it and put it on their balance sheet? Will we see Tesla going all in? Coinbase, Square, Cash App. When will this FOMO for corporations happen? That could be around the corner. Before we hear anything else, Cathie Wood's weighing on what she sees for the current state of the market and what she sees in the months to come. So let's hear from Cathie.
Greetings, everyone. This is a very active time in the market, I don't have to tell you. But this week, the VIX crossed 65. Which is the 4th largest measure of volatility in the market, really in the last 40, 50 years. And I've been around for all of them. So it's 4th after 08, 09, the tech and telecom bubble in 2000, and 1987. Now, what does this mean, this volatility alert? It usually means the market is meeting a cathartic moment or is in a cathartic moment. And it usually means something is changing. And as you know, we have believed for quite some time that the U.S. economy and maybe the global economy has been going through a rolling recession ever since the Fed started raising interest rates. Well, the other thing that was happening during that time, apparently, was an increase in the carry trade involving borrowing yen, so really shorting yen, and buying dollars and investing them into higher yielding assets than in Japan. So playing the spread. The other reason this became a very widespread trade is the yen has been depreciating. So shorting yen meant that the investor or the speculator was benefiting from the yen going down. Well, that changed abruptly this week as the Bank of Japan increased rates more than expected and seemed more determined to continue increasing rates than many people expected. So apparently, lots of margin calls and a sell-off in a lot of assets. And now the VIX has calmed down. Now, we're not sure if the carry trade has unwound completely. JP Morgan is saying we're halfway there. So perhaps we'll see some more volatility, but I do believe that the Fed now is on high alert because the stock market seemed to be encouraging the Fed to hold tight, higher for longer, make sure that inflation was out of the system. And as you know, we've been saying for quite some time that inflation is unwinding much faster than we're seeing in the traditional indexes. Right now, the CPI is at 3.1, but by other metrics, we're seeing prices fall. And we would not be surprised to see prices fall a little more broadly as the consumer weakens. Now, why is the consumer going to weaken or continue weakening? We believe it's because corporations are losing pricing power. And in order to salvage margins, they're going to be doing two things. They will be laying people off, and they will be accelerating moves to increase productivity. So the unemployment rate will go up. That certainly is getting the Fed to change its spots as we're listening to Chairman Powell. And I think now that household net worth being hurt by the stock market going down is another reason that the Fed is going to relent. Now, one last thought here. Interest rates coming down should be a very positive for the equity markets, but they will not arrest a recession very quickly. In fact, if consumers and businesses know that interest rates and maybe prices are coming down, what will they do? They will wait. Now, the market in its wisdom, we believe, is already understands much of what I have told you. And so we do think that lower interest rates, when this carry trade is completely unwound, that lower interest rates are going to be the defining factor in terms of a rotation in the market away from a very concentrated group of stocks to a much broader based group of stocks. And as I just mentioned, innovation solves problems. So productivity gains are certainly what we believe is going to happen as AI proliferates throughout the global economy. So we just wanted to give you some insights based on lots of years of experience having experienced these volatility, cathartic moments, it usually means there is a rotation into a new kind of thinking underway. And we do believe that will play out during the rest of this year.